The warmest welcome to this edition of Critical Conversations brought to you by Sanlam Investments, a platform to have frank, open, and progressive conversations about the issues of our time, people, planet, and our shared prosperity. My name is Lerato Mbele, and it's always great to be here facilitating this conversation. And so today we are talking about social impact or impact investing. It's pretty self-explanatory. The dictionary definition is that when you deploy capital to create value for shareholders, but also encourage a situation where you have social dividends. However, today we are taking the definition further. We are amplifying the S in social impact. And this entails talking about the values we have, the aspirations for our country, and adopting a higher consciousness as we deploy capital. And so today's program is really a call to action, as it were, a clarion call. Action for impact. Make a positive impact. And let's talk about sustaining South Africa, being the change we really want to see. We really do urge you to join the conversation, making this conversation engaging and interactive. And so please use your social media platforms. You can use Twitter, it's now called X, as you're aware, your LinkedIn profile, or any other social media platform. And all you have to do is use the hashtag critical conversations, hashtag action for impact, hashtag the future is sustainability, and then remember to tag us at Sanlam Invest. You can also use the functionality on the platform to raise your questions, which I'll be able to ask the panelists in real time. And also, whatever other issues you believe should be on this discussion table, bring it forward. It's all welcomed. Right now, without further ado, let me introduce you to our esteemed panel. We have Pawan Singh, Portfolio Manager for the Sustainable Infrastructure Fund at Sanlam Investments. Pawan has extensive international experience and he's worked in the field of multi-strategies for the alternatives business at Sanlam Investments. And so he can give us a multi-pronged approach to solving the many crises that we're exposed to in country and in the world. We also have Deboho Makhabane, who's the head of ESG and Impact at Sanlam Investments. She believes that directing capital to address pressing social and environmental issues in society can ignite change. She's particularly passionate about the social issues of inequality in South Africa and poverty and climate change too. We're also joined virtually by Dr. Gift Bule, who is the principal for the private equity team at Sanlam Investments, growing businesses, taking them to a new level of their growth. Besides his extensive work in private equity and managing a 4 billion rand portfolio for Sanlam and other limited partners in his previous roles, we call him Dr. Gift because he has obtained a doctoral degree in medicine from the University of Cape Town and also in collaboration with the Baylor College of Medicine in Houston, Texas. So we'd like to hear from the doctor, the good doctor, about other issues around public health care in the country as well. And finally, we have Vugile Themba Mkheto, who's a senior portfolio manager for private debt and alternatives at Sanlam Investments. She too has had extensive experience working in advisory services, in asset management, and she's going to just bring to us this knowledge of complex financing as well. And so, ladies and gentlemen, thank you so much for joining us. I love to see full parity on the panel. 2 gentlemen, 2 women. But girls, I'm rooting for you. That's already my presenter bias. I want to first get a sense of what you believe is the most important aspect of impact to you, or simply put, Pawan, what does impact mean to you? Because we're not investment professionals in our day-to-day lives. We're mothers, we're sisters, we're daughters, we're fathers, we're citizens, also experiencing the vagaries of just the reality of being in South Africa at a time. So when you look at the world as you know it and you think impact, what does it mean to you?
Yeah, that's thanks for that question. I think as a father of two young children, I've got a 7-year-old daughter and a 10-year-old son. And for me, impact investing is about making a real sustainable difference that will last beyond my lifetime and generations, so I can leave the world a better place for my children than I found it.
I like that legacy. Teboho?
I guess for me as a citizen is that whatever impact we intend to make has to be felt by the end beneficiary. Whether they can access a product they couldn't before, they can afford it, they now have a job, it has to be felt by the consumer.
Okay, and so think about the people, the end user, society. Sure.
For me, it's about upliftment. It's about providing access to people and businesses that have previously been excluded, especially considering the context of our country, and really giving people an even playing field to make their lives better.
So inclusion.
Yes.
Especially of disparate populations. And the good doctor, Gift.
I think for me personally, I mean, Pawan has already spoken about being a father. I'm soon to be one. But I think
congratulations.
For me, thank you very much. I mean, it's something that each one of us, and in our own respective lenses, that you can take home. And what you bring home is essentially, in our view, it's through the lens of employment and a job, right? Because through that, impact can then translate beyond the conversation, beyond the company, into a community and the ecosystem that each of those jobs then touch. So it's the ripple effect that come from these sort of conversations, but is lived in each room through individual experiences.
Okay, so connecting the dots of humanity is what I'm saying. Tangible benefits, not theory, but real change on the ground. I mean, everything that you've all said reminds me of a West African proverb, which says, we plant today the trees that future generations will use as shade. So whatever we're doing is not necessarily what's going to benefit us, but it's what we leave behind in the world. And that's the essence of impact investing. Okay, so let's get into it now. And let's talk about the value proposition, because we've understood what motivates you as individuals, but what would motivate fellow investors in the ecosystem? What are the values, the ethics, the ethos that would give impact investing momentum? And so, Gift, we'll start with you. We are saying that we're making a clarion call, action for impact. And impact investing fundamentally is a highly specialized field. It's underpinned by ESG and a lot of conversations around ESG. But the question is, what is it? How does it exist? And how do you go about structuring a deal that you know is going to have social benefits at the end?
I think thanks for that question. I mean, it's a very difficult and simple question in itself, right? Because if you don't put yourself in the shoes of the stakeholders that you're engaging with, it can be very difficult to answer that question. But for us, given our own personal experiences and I guess a shared value and principle within our business in Sanlam Private Equity, it's about wearing the lens of that community, wearing the lens of that company and every individual employee. Beyond that, and looking at the families, the ecosystem around that business, and asking the question, how do you make an impact in that business and in the lives of the people that rely on that business? And it can be very different from a fintech business that's in the heart of Sandton, or a business in the outskirts of Cullinan in Pretoria, where meat packers essentially shelve the meat that we buy at many of the retailers across the country. You can't wear the same lens. And the only way you don't wear that same lens is putting yourself in the shoes of the people for whom you're trying to have an impact.
From what you're saying, Gift, I'm hearing that inside the organization are people of different cultural persuasions, demographics, race, age. They are a microcosm of society. So the more diversity you have in the deal room, the better a lens of society that you have. So that's the first port of call. And then secondly, it's really going above and beyond to connect with society around you for you to understand what you're solutioning for. Have I understood that correctly?
Absolutely, because you would otherwise be applying the same paintbrush across different landscapes, different businesses, different ecosystems of businesses. So it's in having that inherent understanding within the team to know that we don't have all the answers, but from our own personal experiences, how do we better educate the financial decisions that we make and know when we have reached the bounds of our own understanding and bring in different people of different diverse views that can better inform our decisions.
Deborah, I want to bring you into the conversation because some would say, you know, this is not new fundamentally. Entering the investment lexicon, say a decade ago, was this idea of the triple bottom line, where you thought about how many beneficiaries, how many stakeholders you have in an organization. So ESG, impact investing, all of that is kind of predicated on those fundamentals. They already exist in the investment field. So why are we talking about sustainable investment, impact investing, ESG, when the philosophy already exists in the investment fraternity?
Yeah, I think it existed, but we're never intentional about it. And what impact investing is says from the onset, you're pursuing social as well as financial returns. And impact investing exists because we have so many issues in society, you know, the development goals, that grant funding is not enough to fund it. So it's the funding gap where we have so much money in the private sector. How do we become innovative and address these issues using the investments that we make, but being innovative with the way we fund? And now we're putting it in. We're not just paintbrushing, but we say, let's be intentional about our assets.
When somebody says to you the role of business is to create products that render solutions to consumers, customers, shareholder value, but you're not solving social problems. That's the job of the government. Sounds like you want to be a government.
Yeah. Well, I'll say to that person, the private sector or companies don't exist in isolation. They're still a citizen. So we are impacted by social issues we see. High unemployment, say for Sanlam, we're also an insurer. People will lapse their premiums. For us as asset managers, we need contributions towards pension funds. So with a constrained economy, with people not working, our products and services will not be consumed. So it's a risk to us as well as the private sector.
So ignoring social problems will ultimately have a bearing on the sustainability of business, commerce, and South Africa Incorporated.
Correct.
Okay, Pawan, I want to bring you into the conversation as well. And we're talking about the kind of insights, the skill that's needed in bringing sustainability into a portfolio.
Yeah, sure. I think what becomes very important to some of the points that Tabo mentioned is to incorporate the lens of impact investing at the very early stages of your investment process. So when you setting up your investment philosophy from where I sit, you know, I think it's a very critical element. We spend a lot of time, effort in finessing, you know, what we mean by impact, which particular goals are important to us. And then when we look at an investment, it has to fit into one of those categories, whether it's climate mitigation, job creation, digital inclusivity, what have you. So it becomes a very primal and relevant element of investing, along with your commercial returns, your measurable impact that you can track and record over a period of time.
Vugile, as we move the conversation along, I remember a report, and I love to cite this report actually, that says that the more diversity you have in an organization, the more profitable the organization. In fact, it's been proven so, that companies that have diversity are 25% more profitable than others. So there is actually a financial motivation to be more inclusive. But at the level at which you operate, at SMEs, can they really be? It feels like you're just burdening them to say to them, go and fund money, go and find money, but also meet all of these social objectives. I mean, when do they grow the business?
Yeah, I mean, it's a reality, and often we feel that way as we're engaging with SMEs and entrepreneurs, that we are now raising the expectation. I think from our perspective, or my perspective rather, it's really about demonstrating the value that diversity can bring. When you have a diverse management team that consists of people that mirror your demographic, that mirror your customers, that's when you're able to actually make decisions that matter for the very very people that are buying your products and services. So you can't see yourself outside of that. You can't ignore it. You can't fight against it. And so for us, in our perspective, it's about demonstrating that value for SMEs and then saying when they have gone over that hurdle, when they've gone through the efforts of making that change and implementing that diversity, how do we reward them? Because I think that's where we're falling short as funders.
All right, we're going to talk about meeting the funding gap, but also adopting a different perspective in the investment lens and just being connected to society around you. However, at this juncture, I'd like to bring in our delegates and our viewers into the conversation by asking you to please participate in a poll that helps us gauge your sentiments about the topic today, social impact investing. Which of the following investment strategies, is the question, would you consider to be the most aligned with your personal values and beliefs? Remember, when you walk into an opportunity, you walk in as you and what you believe in. And so when a proposition is put before you, which aligns with what you believe, the way you see the world, the way you want to change society around you. So would it be a strategy for sustainable investing, for impact investing, for ESG investing, or simply none of the above? Please vote now, and let's see how many of you can give us a real gauge of what is happening on the ground. Remember to continue the conversation on your social media platforms, Twitter, or it's called X now, LinkedIn, any other platform, and use the hashtag Action for Impact. The future is sustainability, hashtag critical conversations, and remember to tag us at Sanlam Investments. Okay, let's have a look at the poll results. It seems as though just close on to 50% of people have participated in the poll thus far. So we really do urge you, please use the poll, which is on the portal of the platform. But so far we can see that 65% of you who have participated in the poll believe that sustainable investing is actually a great strategy to pursue. 20% of you believe that impact investing matters. Interestingly, 10% believe that the all-encompassing ESG is constructive, and 5% said you don't really believe none of the above. So, ladies and gentlemen, sustainable investing seems to be something that the majority of our pollsters believe we should be talking about. And so let us do that. Thank you very much for participating in the poll. And remember also to send us your questions, and we'll be able to see what it is you also want discussed at this discussion table. I want to start off by quoting Mahatma Gandhi, who said, "You need to be the change you want to see. The agency is yours. We can expect everything of the government, leaders, the corporates, but it starts with you using the privilege, the opportunity, the skills you have." And I think this is going to matter in this sphere, because whoever is at the table, SME, business that's growing, big transactors, you come in from the prism of your own lens. And so what I'd like to know are the projects that bring about meaningful change. Perhaps, Vukile, we can start with you. Just from where you sit, where can we see sustainable investing being a strategy that starts to just transform South Africa?
Yeah, from my perspective, housing is a huge issue. You know, despite all of the gains and that we've made since the inception of democracy, so many South Africans are still living in informal housing. And that's really a nice word to say, shacks. We see it everywhere. You look outside of the window as you're landing at Cape Town Airport and you see them. You drive past Alexandra and you see them. It's everywhere. It's something that we can't ignore. And so for me, that's such a huge, important opportunity for investment, which is why one of our projects is really close to my heart. We've invested in a social housing project in Devland, Soweto, where we've provided over 200 units of social housing units. And what does this mean in reality? This basically means that lower income earners, people who earn anything from 3,000 Rand right up until 15,000 Rand, now have the supply or the option of units that they so desperately need. Right. And it's not just any type of unit. It's a beautiful unit. It's a 2-bedroom unit. It's a unit that has a bathroom, an ensuite bathroom. Imagine how many people don't have ensuite bathrooms. But people at that level, just based on who they are and who are deserving of that humanity, have that. And so I don't think we can fully address the issues that we have in our country if people don't have decent homes that they can come back to when they come back from work, homes that protect them, from all the kinds of challenges that we experience.
All right, so when you talk social housing, I'd just like you to just give us a more synthesized understanding. We're not talking RDP, government-sponsored housing, and we're not talking full residential real estate. We're talking somewhere in the middle where people can pay in from their savings into the home, but they still need the surplus gap filled up. So who does that filling up? Because it's got a commercial proposition to it, but it's not fully.
Yes, absolutely. I mean, there's a gap that exists, because these type of projects need to be affordable. Therefore, other stakeholders need to come to the party. And by other stakeholders, we mean grant funders, the SHRA, for example. We mean the Gauteng Provident Pension Fund that provides much more patient capital. And then we also mean institutional funders like ourselves who provide loan funding to developers. Through this culmination of capital, we're then able to provide a product that is affordable, and therefore that gap, that need of that lower income earner, they're actually able to afford a rental unit because of that.
Okay. Pawan, in your sphere, which is big infrastructure, can you come in here? Because there's a difference between what we call economic infrastructure, the bridges, the ports, the electricity supply lines, and social infrastructure. And it sounds to me like when you're building for social housing, it's the softer side. And yet we're told that's the game changer. So do you ever face the dilemma?
Yeah, so I think the one clarifying difference in the way we manage our funds is, we fund predominantly into economic infrastructure. But I think, in the big ports and rails and wind farms and solar farms, what gets lost is that there's actually, space for economic infrastructure to create a social impact. So give you an example, we're considering a transaction in the township economy for high-speed fiber internet, and typically you would think that high-speed fiber is the domain of the green leafy suburbs, which, but there's only so many green leafy suburbs going around in South Africa, and that market has been captured. Now there's 9 million people living in the township economy that access unreliable, slow-speed, expensive data on their phones. So they have the capital to spend, they just don't have access to that infrastructure. So by providing that underpin and infrastructure in that space, we believe we can create massive inclusion from a digital perspective, and we know the benefits of digital inclusion from jobs, from education, from content, etc. is phenomenal.
I want to bring you back into the conversation, Gift Pule, and the issue, initially when you started, you told us about some of the areas where you've seen meaningful change. You spoke about a meat packing business outside of Pretoria, for instance. I'd like you to just give us another sort of an expanded view of what we mean by projects with impact. We're hearing digitalization here, social housing. In your view?
I'd actually like to throw another example back at the audience and the panel. I mean, we recently invested in a business that is in waste management. And that's something that we all generate. We all contribute to the 120 million tons of waste that is generated annually every year. But what we took was a different lens to say, all this waste ends up in a hole, in landfill, that all have sort of the known environmental impacts that are unpreferred and actually go toward taking away from our future generations. And as Pawan said, our children that need to inherit this planet in a better shape and form than how we found it. Yeah. And the investment thesis for us was, this business needs to divert as much waste away from the whole by offering alternative forms of waste disposal that avoids what we have now come to see as sort of illegal disposal sites.
Right.
And typically, again, to a point that Vukile raised earlier, these tend to be very close to some of our informal settlements. Again, impacting on the less fortunate because you don't see them in the green leafy sandtins. But how do you make capital work in a way that contributes to the environment, but makes it work with an environmental aspect and impact that can all be shared by all stakeholders?
Okay, so I'm hearing quite a few things. So if I simplified it, waste management, I mean, it's quite a broad field, but clean up the cities, right? We've got an urban decay problem. Give people housing. We've got an informal settlement problem. Digitalization, we've got a skills gap, and we've got a modernization priority. Teboho, your view, what are some of the problems really be a game changer? Because from what Gift has also said is, if we provide solutions for the most vulnerable among us, they become a market. And some would have thought anti-poverty or pro-poor strategies is just kind of a charitable way of helping our compatriots participate. And he's saying it's actually a very good commercial strategy.
Yeah, I think it's quite great to hear my colleagues talk about this because we're also operating in South Africa. So as we think of what are the game changers, we think of the priorities that South Africa has. So even as we look at development goals, the SDGs, South Africa had NDPs in 2012, way before SDGs were launched in 2015. And when we look at the NDPs, those are the targets, priority sectors that the government has put for us to meet in 2030. So Pawan, in his infrastructure fund, he talks about water infrastructure, housing as well. Vukile mentions all of those are on NDPs as well as energy. So we need to prioritize issues that we operate in, you localize them. And when we know in South Africa, unemployment is high, inequality. So even as you look at projects, when you set up your fund, you're like, can I look at projects which specifically speak to that? And obviously, because we are on impact investing, let's not forget to measure, because you can direct it there, but we need to measure that. Are we really moving the needle in this space we operate in?
So I'm hearing you saying that we need to align with national objectives in the country and then find the commercial imperative somewhere in there. So be a solution, but you can also build a business whilst finding that solution. You mentioned information mattering, and mattering, I don't even think that's a word, but but they say data is king. Yeah. Is it easy to gather data? Because we're told, one, there's no traction for sustainability in South Africa. That's not how businesses approach an opportunity. And secondly, those businesses that are pursuing a sustainability goal, they don't really keep track. It's hard to measure impact. How do I know I'm having an impact on you?
Yeah. So for the funds that have been discussed now, we have to measure impact. So impact investing requires that you show the social return of what your objective is. So data is key, but it's great in the private market. Since we're the investors, when we're quite close to the entrepreneurs, we can set those objectives and ask them for key metrics we want to see. And what data helps us to do is for us to come back and say, look, we've actually achieved impact. So we can go back to our investors and show there's value in this proposition. Right. But going forward, we get a better understanding of those projects we're funding. Vukile mentioned with the social housing, or the SMEs that they invest in. Yeah. If they've achieved certain KPIs, then they can reduce the funding, the interest, or like reward in the hurdles. But you can only do that if there's data to show behavior and drive sustainability. Okay.
So we've got a few questions coming through. Notando Mkize is asking, I think, a pertinent question. She says, there's so many terms that are interchangeably used: sustainable investing, social investing, impact investing. And she says, even ESG, and we are suggesting that they are different, and yet when we talk, it sounds like we're talking about the same thing. So she says, I'm asking because it seems like they overlap, and I just want to understand and distinguish between the three fields: sustainable investing, impact, and ESG investing.
Sure. So ESG investing, so they're all different responsible investing strategies, and it's different flavors. So on the lighter side, you have ESG investing, which is very basic. It's integrating the risks that you see, environmental or social, in the business. So say we know that we have water shortage in the country. So if a business operations depend on water, as an investor, you need to factor that in your analysis, that this is a potential risk. Or they get fossil fuel revenue. Looking at where regulation is going, this is a risk. Now, that's ESG. That's just integrating the risk framework aspect.
Okay.
And then we move to sustainability investing. That's choosing to invest along the sustainability project. So you can say, I'm investing along SDG 6, water. I'm investing on making more inclusive data. So Pawan and his infrastructure fund, he's a sustainable investor. He chooses priority areas and invests in that. Impact investing, on the other hand, is a bit more advanced. From the onset, you're saying, I want to get financial returns and positive, either environmental or social. And you need to blend your capital to ensure you get that. You cannot come back as an impact investor with just the financial return.
Okay.
You intentionally need your social and environmental. And that's a bit harder because you set up a fund to give you that return.
Okay, so simply put, there is already a blueprint, is my understanding, of what sustainability looks like. The United Nations, with its 17 Sustainable Development Goals, has given you sort of a globally converged blueprint of what are the things that matter, from job creation to gender equality to sanitation to anti-poverty measures, fair work. There's there. But once you go the social impact side, you're saying my end goal is something meaningful on the ground, in the community, in the world.
Measurable.
Okay, something measurable. And we're going to talk about how you measure. And then, of course, there are the financial strategies of going about it. We're going to have another poll, and I've taken note of the concerns that have been raised, is that, Lerato, you closed the poll too quickly, okay? So we're going to let it go on for a little bit more. And we do know that almost 50% of our participants participated in the poll. And somebody said, how many participants are there? There's over 1,200. So we've got good numbers and we're getting a fair reflection, but we'd really love more of you to participate. So we have a second poll question for all of you, our delegates and participants. And the question is, where do you think impact is most needed in South Africa? Local context. A country with many challenges. Where do you think impact, that end game, is most needed here? Is it job creation? Is it climate change? Is it infrastructure development? Is it tackling social inequality? Is it education? Is it healthcare? Or are you not sure? How can you not be sure? Okay, please vote now. And whilst you're voting in the poll, for those of you who are quick-fingered and you've already made your submission, please also advance the conversation online. Go onto social media platforms, Twitter. Elon Musk says we must call it X now. So Twitter or X. You can use your LinkedIn platform. Remember to use the hashtag critical conversations. Then it directs people to the conversation we're having here today. You can also use the hashtag Action for Impact. You can also use the hashtag The Future is Sustainability. So again, join the conversation on Twitter or X, LinkedIn, any other social media platform. The hashtag is Critical Conversations, one word. The hashtag is Action for Impact. The hashtag is also The Future Sustainability. And also do tag us at Sanlam Invests. Okay, I just want to see if I can come across the response for the polls, just to get a sense of how people feel about some of the issues we are talking about. So this time, there's been much more engagement. 825 people have participated, or 825 people have looked at the poll. 526 have actually voted. And the results we're getting, where do you think the most impact is? Okay, quite a few options that were given to you. So nearly 50% said job creation. Job creation, job creation. So that aligns with Dr. Gift Bule's views initially. Only 2% of you believe climate change is a priority. 18%, you'll know, Pawan, say infrastructure development. So that's almost a fifth of the participants. Social inequality, only 6%. Does that mean that people don't believe that poverty and inequality matters in South Africa? So perhaps, Tebogo, you can help us craft a better argument for that. Education, more than 21%. It's a real issue in South Africa. Healthcare, Dr. Gift, you'll know, 3%. And only 1% say they're not sure. So infrastructure, education, and job creation seem to be front of mind for our participants in today's critical conversation. Perhaps you can collate that information and think through just some of these issues to raise as well. It's often said that in order to make a good investment decision, you need proper information, proper research, but ultimately you need a cool, calm head, because those make wise decisions, and we really do need that. Sanlam, we can assure you that we are living investment with cool, calm heads to invest confidently.
Some investments are just investments. But we offer living investments, sustainable ones with a pulse, with a palpable impact. Because right now, solar power is being harvested. A community is being uplifted. An affordable house is becoming someone's home. And tomorrow, and the day after that. That's our living investments and how we're living our investment purpose. Our investments tick and throb, move and grow. They multiply, create jobs, give opportunities, change lives, change our planet. We're talking investments with a heart that beats for South Africa, for Africa. Ever evolving, never stagnant. It's what we call living investments in people, community, and planet. And we'd love for you to live it too.
Yes, Sanlam Living Investments. And I do love the proposition. It's the community, and it is people, and it is planet. And I think this is an expanded definition. It's not about the person, it's the person connected to humanity around them. Whilst we've been talking about impact investment, I think we really need to talk about the process, how to go about doing it. And Pawan, I'd like you to help us with this. You've got the research, you've got the people in the room, you've identified what the objectives are. Now, how do you do it? How do we go about thinking sustainable investment, impact investing, bringing everyone together, taking a project forward?
Yeah, I think a very important element around that is, you have to start, right at the beginning, your impact framework and what goals, are you going to consider. So we spent a better part of 6 months, before we launched the strategy around identifying, understanding, and defining and refining our framework for impact. So we identified 4 key sectors which are aligned to the National Infrastructure Plan: energy, water, ICT or digital infrastructure, and transport. And then within that, you have elements like job creation, climate mitigation, etc. Right. So we incorporate that in our investment process right at the very beginning. So when we look at an investment opportunity, clearly it has to meet the commercial or the financial hurdle, but it has to address, one of these 4 key sectors. Otherwise, we don't proceed with that investment. And that's a very important guiding light for us when we're making investment decisions when it comes to impact.
Okay, and how are the funds actually conceptualized? How is the capital deployed in this particular direction, that direction? A term was used earlier on, blended finance, bring together the resources of different stakeholders and participants?
Yeah, look, there are funds out there that do blended finance, and there's also other mechanisms available. For example, Vukile earlier alluded to there's grant capital, DFI money, which is development finance institutions, whose entire purpose is to unlock, and catalyze capital in the space. There's credit enhancement when a transaction, needs a little bit of support. Right. Then you can speak to DFIs to provide some sort of credit support, to get the transaction to financial close. Right. So that becomes quite an important element, in your investment decision-making process.
I'd like you to help us just understand the roles of different stakeholders better, because my limited understanding is that if you're going to start a big project, so let's just say renewable energy, at that onset stage, nobody wants to take on the risk. And so a multilateral development bank, a DFI, comes in. When you realize there is commercial value, that's when the commercial banks perhaps come in, asset managers come in, and then there's another layer. So it's a process, and there are different people playing a role at different stage of the process.
Yeah, sure. I think I can unpack that in a little bit more detail. So there's two, key DFIs in South Africa. One is the DBSA, which does a phenomenal job of helping catalyze investments. I mean, they've got a specific division called the Project Preparation Office, whose entire job is to help prepare a project to get to financial close so that it can reach commercial investors like ourselves, other banks and other pension funds, and other asset managers to unlock. So what we do is we regularly interact with the DBSA team to help understand, what's coming down the pike in the next couple of years, so that we can start looking at it and engaging in it. Then we also have someone like an IDC, which is more involved in the manufacturing sector, to help provide, that difficult to find development capital to help projects, get over the hurdle, because it can take anything from 2 years to 7 years for a project to become bankable, and a lot of funders go bankrupt in that time frame. So we definitely need access to that capital, and in developed markets, the likes of BII or CDC, for example, out of the UK, they've invested close to 500 billion rand in Africa as a continent, to help catalyze projects. So they play a crucial role. So you don't always have to wait for the government intervention. There are quasi-institutions like this, which are predominantly run by ex-bankers, that understand, what we need, and help, bring a project and unlock it.
And that you're almost waiting a decade. That's what you mean by the patient capital.
Yeah.
So you don't lose the dream in that time frame.
And remember, 10 years, it's almost 7 years to get a project to financial close, and then 20 years to harvest the project. So we're talking about, a 30-year lifeline of an infrastructure project.
Okay, let's talk about what's happening in the SME space, Vugile, because, some people would say asset managers, pension funds, they're not banks, right? They're not there to be offering loans to a business to get off the ground. And yet, from the way we've spoken today in terms of sustainable investing and supporting SME development, it's almost like that's what we're asking pension funds and asset managers to do. And that's the purview of the commercial banks. That's the purview of maybe government agencies.
Yeah, Lerato, that's exactly what we're asking, but we're making that ask because of the challenges that we're seeing in the SME market. Entrepreneurs are saying, I'm growing my business, so I've got an idea, I've created a product, it's reached post-revenue, I've tapped out of everything else that I can, where else I can source my funding, your family, your friends, your fools. Great fools. And I've approached my bank and asked my bank for a loan, and perhaps a bank has given an SME an overdraft, but that isn't enough. Businesses then come to a point where they say, we now require more growth funding. And what do we want to use with that growth funding? Maybe we want to buy a machine, maybe we want to buy a vehicle, maybe we need it for working capital, something that's going to help basically scale that business and grow that business over time. But the struggle that we're seeing within our market is really the rigid approach that banks have to SMEs, and how they assess for risk. It almost seems as if they are asking for things that SMEs just cannot provide, collateral that may not exist, a certain level of equity that doesn't exist, because for some SMEs, particularly Black-owned businesses who come from a history that we all understand and appreciate, just don't have that. So when banks are making that ask and SMEs are saying, well, we can't provide it, and therefore banks are saying, well, we can't give you the funding, then there's a gap. And that's the gap that we're trying to play in, to say where the banks are unwilling to play, we are willing to take a flexible approach to funding and to provide a loan so that a business can actually grow.
Let me throw at you a pushback that perhaps you've heard many times. So somebody says, let us remember, pension funds are looking after the savings of hard-working people. Why would you take my savings and invest it in somebody's dream, which is ultimately what a business is, that we don't even know whether it would ever grow to its fullest potential? That just sounds like a high-risk venture in a field where you're not supposed to be taking maximum risks on people's savings.
Yeah, the idea of risk is interesting, Lerato, because there's a difference between perceived risk, which is what we see a lot of in the SME market, versus real risk. If we look at SMEs and how they've weathered the storm through COVID, through operating within this environment, we've actually seen very resilient businesses, business owners that have been able to not just survive, but thrive. And so what we're asking from pension funds is to really think about the world in which they are going to retire into. It's to say that we believe that, and we've demonstrated it through our historical returns, that we can actually lend this money out and generate a return and also preserve capital. But we can do it in such a way that actually adds meaningful value to society, so that the world in which these pension funds, these retirees retire into looks different.
Right.
Otherwise, what's the point? What's the point?
All right, Gift. I'd just like us to crystallize two concepts here. Certainly help me. Okay, so we're talking loans or a form of a loan, support for SMEs. And then there's equity, which is where you buy into a business and then help to run it, grow it, improve it. And then at some point you exit it. So is private equity perhaps a better strategy of going about supporting small and medium enterprises to grow into becoming bigger versions, better versions of themselves? And you alleviate the risk or the perceived risk?
Yeah, I mean, thanks for that question. I think there's every strategy has a home, right? And everyone has a role to play. It'd be private debt, it'd be infrastructure. But from where we sit as private equity, we think about it as having the responsibility and, I guess, the burden of investing pension fund money. And as Vukile says, these are old grannies that need to retire comfortably and probably plow that money back into their grandkids and the education of their great-grandkids. So from our perspective, given the fact that, one, we invest not only for returns, but for social impact, but we have the proximity of being, one, on the boards of these companies, assisting them with, call it, strategic and commercial ways of becoming not only sustainable, but commercially viable, because our lens is typically a 5 to 7 year horizon. However, on entry or on investment, we need to be able to justify to ourselves that come year 7, we can sell a story to the then buyer that this business is not only sustainable, but it continues to grow beyond our investment period. And equally, that buyer then needs to think, geez, when I then sell in 5 to 7 years' time, what will I be selling?
Right.
So similar to Pawan, yes, private equity has a slightly bad reputation in being, call it the barbarians at the gate in some instances. However, we take a very long and call it a 10 to 15 year horizon on some of these opportunities and help these businesses take that next step.
Right. I want to challenge what you've just said, Gift, because when Pawan gave us his numbers, his time frame, we were talking 7, then 10, then 20. You're talking 5 to 7, maximum 10. So if longevity is the principle here for social impact, if you're trying to make an impact today that lasts for generations, it doesn't sound like that's what private equity does.
In fact, on the flip side of that coin, that's exactly what we do, because once, for instance, businesses that have come through the hands of someone like a Vukile through her SME business come into our realm, which is businesses that are slightly more mature, needing commercial and strategic guidance in order to unlock certain markets that have been previously inaccessible.
Yeah.
We task ourselves with doing things in that 5 to 7 year horizon. And we understand that these are high growth businesses that have a propensity for creating jobs. And we need those jobs today, if not yesterday. So sometimes having long dated ambitions is fantastic. And that comes in the inherent nature of thinking sustainably and building for impact, building for the future. However, certain things need to be done with immediacy. And I think that's where we play a strong role by jumping in, understanding what these business needs, and helping them realize those ambitions within a short period of time.
All right, so different strategies, Teboho, whether we're talking debt and loans, whether we're talking different multilateral players, whether we're talking private equity, but ultimately everybody has an end goal. So what are those KPIs? How do you factor them in? And how do you know you're coming up with the right metrics?
That's right. I mean, we heard from Vukile and Gift, who both manage impact funds in their respective spaces, whether private equity or private debt. They don't have to set their funds as impact funds. They could go with their daily businesses, but they decided to actually have them as impact funds. That's more resources, that's frameworks, as they say. There's a form of screening a deal. You might walk away from it because it's not impactful or unwilling to adopt certain metrics. So it's a commitment because they understand it's important and we're building the country. So in doing that, as you set your fund, you decide on your impact objectives. So both Vukile and Gift will decide we want to have job creation and measure the quality of jobs. You put the right metrics, you target them. So you target through this fund, this is how many jobs I want to do. This business is on growth stage. They'll probably add this number of jobs. How are they remunerating the people? Do they have the right benefits to the job, like pension fund, medical aid, and can you encourage management, as Gift said, they sit on the board, to actually improve the quality of jobs. It helps them with human capital retention. So it's also risk mitigation, but opportunity, which we then at exit, we can measure if we've achieved that goal.
I once heard an investor say, South Africans are obsessed with job creation. Let me qualify. If you're starting a business, it's inevitable that a good business is going to create jobs. Okay? If I'm going to start a clothing business, I have to employ seamstresses, somebody to fix the sewing machines, it's inevitable that there are going to be jobs. That can't be the KPI. It's an inevitable KPI. We need to be talking bigger things in South Africa. Is that a fair comment?
I think it's a fair comment, but it needs to be qualified. So we are sitting with high unemployment, but we also know that businesses struggle to retain people. And sometimes it's not because people don't want their jobs, but we don't have the right infrastructure, the right policies. And we also talk about the brain drain. So within the business, there are things you can do to actually maintain a job. You have the right benefits, you can skill your people. Maybe they start off with a low skill, but you have a gap for a more skilled. So nothing is passive, I guess is the thing. It has to be intentional. And if you decide on that, then you can actually help build a framework for that business to retain jobs and manage their human capital.
And let's go back to the issue you raised earlier, data collection. So once a business has been formed, a fund has been launched, a process has begun, and you've got your KPIs, how do you know that everybody's doing what they intended to do? Because we're told that when it comes to data gathering and reporting on sustainability, it's not happening, particularly at SME level. One, they don't have the capacity, but two, it goes back to that initial point. How do you touch and feel the success of an impact strategy?
Yeah, so I mean, I just mentioned a few KPIs, particularly with jobs, but we can't even make this change. We can't even justify job creation if every business creates jobs, if we don't have the right KPIs. If in the beginning we have a baseline, this is how your jobs were, this is the quality of them. And as an entrepreneur, ever since we've asked for this 5 extra KPIs, we won't bet in them with 400 KPIs. Have you seen a difference in your business? Because it also helps the manager. If you don't have KPIs, you can't manage your business as well. So it helps you with that. But also when it comes to impact investing, it's been around, but it's not mainstream yet. We're still trying to show value. It's a value proposition. So the more data we have, the more we can even prove value of launching more of these impact funds that you can actually get financial returns with a measurable impact.
Okay, so we still need to do a lot of gathering non-financial data in this sphere.
Correct.
Better data. Okay, so I'm going to throw...
Maybe just to jump in on that same point. I mean, these companies typically report, some of them on a monthly basis. And in fact, some of our businesses can provide financial reports to us on a daily basis from a trading perspective. It's a change in psyche that we can drive insofar as saying, you can tell me how much sales you made on a particular day. Tell me how much equally water you used in our red meat processing facility, or how much electricity by kilowatt that you consume and the environmental impact thereof.
Okay.
That way you align that KPI with, for instance, a CEO or CFO and their respective executives to ensure that everyone is driving towards the same goalposts, but without changing the psyche of some of our businesses. It starts seeming like it's a laborious and an additional aspect of work to do, but it actually isn't.
Right. Okay. So we've spoken about the stakeholders, we've spoken about the strategies, we've spoken about the values. I'd like us to talk about beneficiaries. But just before I go to an audience poll, I just want to read through two audience comments, which sort of give you a sense of what people feel about some of these impact issues. Vainan says, I grew up poor, but education and hard work helped me to move beyond what my own parents could achieve. So there was a generational shift. For that, I'm grateful, he says. He says, educate people, train them to do business, and not just to want to be laborers to get a job. Train people to want to own a business. And that will take care of the inequality quotient, he says. He then says something very controversial. He says there will always be lazy people, sick people, who just want to take from where others are willing to work. Do you think that's a fair comment?
I'd say to Veno, I mean, we find there's space for entrepreneurship. That's what I'm hearing from his post, that not everyone should be employed, therefore job creation. But those entrepreneurs need to be funded by some people, and they will need employees. So there's space for both of them. So this is still important. And I think education is quite tricky in our country. So yes, we have to think of formal education, but part of this is also in-job training, the skills that you can get in a business, internships. So we need to be innovative around what resources we have so that we can all be the solution.
Pawan, maybe you can help Jabulani here. He says, why is it that the private sector is leaving the job creation to the public sector? Because as early as 2018, there was a report that showed that the private sector in South Africa is sitting on billions in reserves that they're not willing to invest in the country and so scale up employment. So we've got something of a disconnect. There is the money, but it's not being deployed.
Yeah, I think that's probably a fair observation around the timeline that he's mentioned, and maybe it's a function of risk aversion. So again, you have to look at, in the private sector, who's holding that cash and who's not. So banks were risk averse at that point in time, based on the crisis that we're coming out of. But I think in 2020, as we entered COVID, within Sanlam Investments themselves, we found this massive gap of job losses, SMEs, struggling, and on the back of that, we launched two funds. One of them were gifted as a principal of the private equity fund, with job creation as a predominant element, and then Vukile manages the legacy SME debt fund, which was predominantly created because banks were struggling to provide financing to these struggling SMEs. So again, I mean, we're in a crisis. There's always an opportunity, and it depends on what your focus is. And then our focus was on there's a massive need for capital injection, job creation. So let's go out and launch these funds.
Vukile, maybe you can help Moses. He says, hi investors, how do you assist a company that has more than 1 year of registration? So it got launched a year ago, for argument's sake. But in that year, from registration till now, it hasn't traded. Okay? It's never gotten a business off the ground in that period. And then suddenly, it gets a contract, and that's a breakthrough. What do you do with that?
I think, what goes hand in hand with capital is actually also business development. So what I'm hearing from this type of business is to say, I've registered my business, I haven't had a lot of track record, now I do have an opportunity. But really to effectively unlock that opportunity, any kind of financing needs to come with business development support. To say, yes, you have this one contract, but how do you develop or tap into other markets? How do you service other customers and diversify your revenue base? And I think that's the type of unpacking that we need to do as investors as well. And not to just say that we're providing finance, but we're also providing that business support to that type of business.
All right. And then finally, before we go to the poll, Manka says, for me, education is the best lever to reducing social inequality. And I think Nelson Mandela said exactly the same thing. That's the game changer. But I find it interesting, Gift Pule, is that we have a country that has massive health needs. If COVID taught us anything, it taught us exactly that. We need it on the R&D side. We need it on the inputs of treatment, medical equipment side. And yet very few people believe that healthcare is the social impact we need. However, journalistically, I've seen so much work being done on the science and biotech side. Could you maybe make a case for medicine? Because many people don't believe that's the game changer, and I find that intriguing.
I mean, and I can understand that view, Lerato, to an extent, right? Because to some extent, healthcare is somewhat of a byproduct of a working economy, right? Because you have people that earn, goes back to employment, that can afford a sustainable base of proper healthcare. Inherently in that, back to jobs, you have people that earn, therefore there's revenue received by SARS that can be, without too much corruption, deployed in the right places in order to afford, call it public services, and the primary of which being probably education and in tandem healthcare. So I think there's a lot of emergence in sort of the biotech and health tech space. It's still very VC or venture capital in nature, where it's still sort of breakthrough and needs the sort of support that Vukile and her business can provide. But from our perspective, we're seeing some of these mid-sized businesses that are needing strategic support to be able to compete on the manufacturing side, on the sort of in-housing as opposed to importing a lot of our medical device manufacturing and treatment production. So it's a very vibrant space, but it still goes back to fundamentals, which is jobs and education.
Right. All right. And to this point, let me just say that Sanlam Investments has published a sustainability report. And so for anybody who wants to look at the various sectors, some of the businesses, the stories we're telling you about on the Sanlam Investment website, you'll be able to locate that report and really do a deep dive, as they say, into some of the case studies and the different sectors where you could perhaps direct money and funding. But for now, that audience poll that we promised. In your opinion, who are the primary beneficiaries of impact sustainable investing? Who are the beneficiaries? We've told you the stakeholders are, but who are the beneficiaries at the end? Is it the shareholders and investors? Should it be nature and the environment, local communities, future generations, socially responsible businesses, or all of the above? Please vote now. And as you do so, remember to keep the conversation going. Hashtag critical conversations, hashtag impact or action for impact, hashtag the future is sustainability. And again, please tag us at Sanlam Investments. So in your opinion, who are the primary beneficiaries? Shareholders and investors? The environment, nature, local communities, future generations, businesses that are conscientious and socially responsible, or every one of these people we are referring to. Please vote now, and please keep talking about the issues we've raised today at hashtag critical conversations. I still see that many of you are participating in the poll almost in real time. So I'm not really sure whether to read out the results because people are still voting, almost 500 of you. But so far, the results show that shareholders, investors, the audience believe only 17% of the beneficiaries. The environment, only 2%. Local communities should benefit, 7% agree. Future generations, 15% agree. And the majority of our participants say all of the above. Every single one of these should be a stakeholder and a beneficiary. The shareholder, the environment, local communities, future generations. But if you break that down in a more granular form, people believe investors should be an afterthought. Okay, let's talk about the beneficiaries when we know that 58% of those who participated in the poll believe that all of the above, the future generations, the children you spoke about, Pawan, the communities you mentioned, Deboho, the socially responsible businesses that Gift and Vugile have been talking about, that they really do matter in the storyline. So I think it goes back to the fact that we've been talking about people, planet, shared prosperity. But I love, Deboho, that when we are having an impact investing conversation, we don't really talk people, we talk community, recognizing that there's this interconnectedness of humanity. Tell us why.
I think, I'll give some examples. We see that shareholders and communities are very closely intertwined. And some of the examples we have, when we had the protest action in South Africa, and there was protest in malls, what showed is that the shopping centers, which had local communities owning stores, were actually more protected than those who just had anchor tenants outside, like the big retailers. Right. And that shows you the capital, the social capital that you have in communities. In Pawan's funds in infrastructure, it's mentioned that they build these wind projects in the middle of nowhere. You need protection. If you don't hire the local community to work in those funds, find some form of way, have some of the proceeds in a trust that benefits the community, which is what they've started doing. Right. You can see how these are related. They want to be part of that. They need to be owners. And that's how you get your social capital. So you can never really divorce people, individuals, communities, and business.
How would the country win? If I said to you, let's look at SI from the lens of South Africa. We've looked at various areas: digitalization, social housing, education, healthcare, water, those kinds of things. But in terms of where South Africa finds itself in 2023, what is that value prop? What is the real game changer? Let me ask it that way. What is the one or the two interventions where we say this could change the country for better?
I think we've spoken about the priorities that the country has actually put forward. And I like that from the polls you've read out, people's comments keep saying education. And I want to say, yes, education, but there's infrastructure that supports it. The fiber connectivity in townships that Pawan is, it can help education. Education is moving online. So it becomes cheaper, it becomes accessible. So we need all of it. We need funding, we need better infrastructure and water, because then that also shows that, if there's no infrastructure, if there's no energy, then we can't really connect. Then education is also a problem. People are unemployed. You are hungry, you can't eat. We know that also affects it. So it's very hard to isolate an issue, but I think we should play to, there are more important material things for the country, identify those, but also give them the weight they deserve, because they all play together.
Pawan, I want to bring into the conversation just by way of being a devil's advocate. I do that sometimes. Every solution that I've heard here is coming from private sector, asset managers, pension funds. Where's the government in this story? Because these are the promises they make at election time. We are here to address the social aspects of living in South Africa. And yet, a medium-term budget policy statement was read out by the finance minister last week. And we know that this government is cash-strapped, literally on the brink of bankruptcy. What's their role in the story?
Yeah, look, I think if you not everything that comes out of the government domain is negative. I think they can do, and it doesn't have to be cash per se. When you don't have capital going around, I think the one thing they can definitely do and have done in some cases in the past, especially in the IPP office, setting up the IPP office around the renewable energy program, was create a compact, around good governance. Be transparent around the tendering process. And we currently are in an energy deficit, and there's a lot of stress on the grid. A transmission grid through which energy flows, and there's no spare capacity available for the transferring of power from the north to the south in the country. So to be transparent around the queuing process about how energy projects get access to the grid,
Right.
which energy projects in which in which province.
Right.
So I think having transparency and creating an enabling environment, around procurement,
Right.
etc., can become very important from the government side of things.
All right, Gift, I want to bring you into the conversation, and Vukile, you can add, which is, and we alluded to this earlier, a startup is exactly that, starting a new venture. You first got to fundraise, build the business, grow the business. And now we're saying, on top of every other charter and code of conduct on employment equity, perhaps BEE, whatever, now we're adding ESG and sustainability. It starts to become burdensome on compliance. We're saying to businesses, start up, solve, but meet all these compliance requirements. Do you agree with the view that for newer businesses, perhaps they need a little bit more leeway?
Ladies first. You were
That's a cop-out.
Sure, I'll give you a moment to think about it, Gift. Look, I think the reality is that it is burdensome, but I think as investors or funders, we need to think about how we can make it easier. And an easy one is technology, really. It's how do we make it easy for SMEs to provide us with this information? But how do we also make our requirements flexible in such a way that it doesn't feel as burdensome. So it doesn't have to be every single month or every single quarter.
Okay.
In fact, what we see with change is that change is actually quite incremental. And it takes a long time, sometimes a year or more, to actually start seeing it. So we lessen the frequency. We introduce technology where you can go onto a
Right.
website and put in the numbers, and we verify those
Right.
numbers. And then we reward you because it then incentivizes you to say, look, we're all working in this together,
Right.
but somehow it needs to benefit me as an SME owner.
Are there those incentives when you invest in a business, when you seek a stake in a business as a private equity player? You've got that 7-year horizon, you've spoken about it, but every step of the way, you're saying, are we measuring sustainability? Are we doing the right thing?
Yeah. I mean, I'm glad actually Vukile went first there because inherent in that value chain, there are those, call it young businesses that need a little bit of that hand-holding initially and may find some of this reporting cumbersome. However, in our space and from where I'm sitting, these are slightly more mature businesses that are past that initial, call it, phase and now need that step change, that supercharged partner that will help them guide the next 5 to 10 year horizon. So from our perspective, it's actually inherent in how we think about investments from the beginning. So when we're looking and screening at an opportunity and assessing its viability from a financial perspective, inherent in that is assessing the sustainability and impact that we can generate from this very investment. I mean, I make an example where we in fact get daily data of some of the waste that goes into our waste management business away from landfill by investing in a weighbridge and creating jobs of people that sort the waste. And importantly, this is quite critical for some of the clients as well, because you can go back to one of the large alcohol manufacturers and say, today we've decanted and alternatively disposed X many kiloliters of your waste product that would have otherwise been sitting in a hole. So it's important to create that closed loop, both in affording the capital, but also supporting the management team drive these reporting cycles that we need.
Teboho, what is the sort of the ethos around sustainability? I think that's the right word, in the listed space, because these are not listed companies. These are startups, these are medium enterprises, and then of course these are funds. But of the companies that we know that make up SA Inc., what work is being done and how much more work is needed to amplify the S in ESG? Because that's what we're talking about today.
Sure. And maybe just let me tie it into what you asked for Gila and Gift as well. Like for any business, whether it's listed on the JSE or it's a private business, sustainability doesn't have to be a burden. It's a risk, opportunity, reward. If we look at the last 4 years in the country, businesses had to deal with load shedding. And we know the costs of diesel and for these big retailers to keep their operations alive. There's been a pandemic, the S, and we know how that affected production. There's been floods and the Devon Harbour, the supply chain. So we're starting to look at risks that we've never looked at before when we forecast costs. So if you want to survive as a business, you need to start thinking about these. You need to start introducing KPIs so that you're not surprised that you probably never used to, but you can manage them better if you start seeing how would you be impacted in your sector in either an S issue or an E issue. In the public space, it's a bit tricky, or what you see more is the ESG part, the risk part, where companies are coming into terms into how the E on S works. Maybe in healthcare, I would say human capital is a big thing. You know, we have a lot of nurses who go overseas, and companies need to like hire more nurses, train them so that they're licensed. So it's really hard to spend on that and keep. So that's one of the issues that if you have your S hat on as a company, you want to start looking at that.
Going back to that initial question, clarification. When we say S, we're using so many words interchangeably. Social, sustainable. Same thing, different sides of the coin?
No, I think the S comes from ESG. So some want to break it down, environmental, social governance. And they say the S issues, which is when you look at your risk, you can look at your human capital, safety, health and safety, or other social elements of a business, the S parts.
And so the social matters and ultimately it leads to the sustainable.
The sustainable matters.
Okay. I want us to wind our conversation down now and bring all the thoughts of the day together, just so that we really synthesize what matters. Several projects, from what you've said, are currently underway. So we've moved past the point of rhetoric into reality. Some tactical aspects matter in terms of reportage, accountability, monitoring, and measuring. And then it's all of us deciding as a collective what we need for country. I think that's what the conversation has taught me now. So having said all of that, is there a sector of the South African economy that you believe is in dire need of a paradigm shift? You know, we've spoken about game changers like education, but which sector of the South African economy really needs to sit down, introspect and say, right, if we're going on the sustainability path, if we're going to infuse ESG into our strategies, got to do it now.
Yeah, I think the one that comes to mind straight off the bat is transport. I think we have a struggling infrastructure when it comes to transport. Transnet is under a dire need for upgrade of its infrastructure. We still rely on road transport to get goods from A to B. That A creates a lot of emissions, B takes a lot of time, creates a lot of wastage. If you're able to better utilize, our rail infrastructure, provide some, a good governance around, the compact, so that private capital can find its way into it, like we did with the renewable energy program, and there's loads of capital that's required. It can alleviate a lot of pressure on food inflation. It can create lots of jobs and employment opportunities. And move capital from private capital, asset managers, and pension funds into that space.
In fact, what you're just saying just concurs with a report from the World Bank recently, which said when we talk decarbonization, for instance, that one issue, we think it applies only to the energy sector, and yet the biggest risks, the largest component of jobs to be lost in a decarbonization era are in automotives, transport, and logistics. We have to amplify the conversation on transport and logistics, we're told. For you, Teboho?
I think for me, it's just for companies overall. It doesn't matter which sector, to start thinking about some issues of ESG. And I think the one thing is to address, talking of the World Bank, we were listed as the most unequal country in the world. And one of the ways companies can look at their remuneration practices. And you asked about listed companies. That's one way as investors we can actually drive better disclosure in that and be able to use a voting, proxy voting capabilities to vote against remuneration practices that are actually driving the pay gap bigger and enhancing the inequality we see.
So whilst we focus on job creation, quality of jobs,
Yeah.
it's also pay people better.
Pay-
Pay women better, I'm told. Do you know that they say that a woman entering the workplace with a man at exactly the same time, he's going to get paid 21% better. That's a UN report.
Yeah.
Conversation for another day. Go ahead.
Yeah, Lerato, for me, and this has come up throughout the conversation, it's education. Education is the cornerstone and heart of our country, and I don't think we've spent enough time focusing on it. Government has a role to play, but there is a role to play for capital allocators because there are for-profit opportunities, and I just want to give a quick example. We've looked at an opportunity for a mid-fee paying school with great quality education, a huge focus on training their teachers, and therefore you think about the child that comes from that school, the well-rounded individual
Right.
who is going to grow and go to university and innovate and drive business. That is the heart of what is going to pull our country from what we are in right now and feed into the SME and job creation ecosystem that we're talking about.
Very briefly, is it setting up new affordable schools, or is it changing the quality of what's being taught in South African schools? What is it about education that's the lever for change?
Both. We can't ignore the quality aspect of it and how we're supporting teachers and how we're training teachers. But at the same time, we have this emerging middle income that's coming through our economy that can afford to pay, but doesn't have a lot of alternatives.
Okay.
And that's what we need to focus
That
on as
missing
well.
middle gift?
For me, I think, Lerato, it's about changing the mindset in private capital markets. I mean, this is probably the opportunity that we have as capital allocators to be able to touch several sectors. We've spoken about waste management, about retail and food production. Education, we're about to invest in the distance education business because the formal education space, brick and mortar, formal education is not, we're not opening up new universities anytime soon.
Right.
However, to Pawan's point earlier, when we allocate capital across the landscape and improve how we can sort of drive accessibility through his projects in ICT, it feeds into some of our investments that speak to Tebogo's point earlier and Vukile's passion project about education. So it's in private capital markets changing their rationale on what is impact and investing just for returns.
All right. What I want to do is go through just a handful of questions. So short, sharp, focused answers, please, so that we wind down our conversation. Delvin says, it would be great if we get the panel's input on when we talk about investing in SMEs, what's the average deal size of investing in an average SME, besides the definition of an SME, small and medium? And what are your thoughts on how to overcome the high transaction costs in investing in SMEs?
That's a very good question, and we often debate it within our business as well, because typically our loan sizes start at 10 million. And to be quite honest with you, Lerato, that's too big. A lot of businesses actually need much smaller funding, even less than 5 million. Some even need 1 million or hundreds of thousands to actually plow into the growth that they need. What it means for us is that we need to find SME lenders that can do that at scale, that can easily assess those businesses using technology and deploy that smaller capital that's required in the market.
Sylvester says, please could I just get more input on transaction sizes, particularly from the Sanlam perspective, and whether we're talking blended or vanilla transactions. What is your equity to debt ratios that would be required?
Yeah, I can give a view on our fund. So typically 70% debt, 30% equity in our projects. We typically prefer investing via project finance into a ring-fenced SPV, so we can have control over the cash flows. Tenor can be between 5 and 15 years. And then the check size, typically our sweet spot is in the 100 million rand range when we are doing standalone. And when it's a co-investment, then the deal could be upwards of 1 billion rand where we take a small portion.
Dr. Gift Pule, this one's particularly from you. It's from Andile. He says, could you elaborate on the challenges and opportunities you've encountered in promoting responsible investment when we are talking about the South African private equity landscape?
Yeah, I mean, I think it's in walking the talk, right? Because we can sit and talk about all these ethos and guidelines and frameworks, but it's in plowing capital in businesses that need it commercially, driving those returns, but also highlighting the social benefits that come thereof, and not being shy to take risky or riskier opportunities that need the capital.
Right.
However, also being cognizant of the fact that you are blessed with the responsibility of investing
Right.
pension funds money. So there is a responsibility level there. However, understanding that the opportunity landscape, you're not going to get a dripping roast every day in terms of a fantastic opportunity. Some are rough diamonds that you have to dig a little bit deeper for.
Okay, and perhaps, Deborah, you can help Debbie with this one. It's more a comment, but I think it's an important one because she says, we're talking about what people should be doing. What they should. We should all know right from wrong. It doesn't mean that people do right from wrong. So there is a carrot and a stick approach, but what would lead to more carrot, less stick? The incentives to do the right thing.
Yeah. I mean, also, I guess for us, we're also speaking as investors. So, we're rooting for the businesses that we invested in. And I think Vugile spoke to this. In some of the impact objectives, as she said, we don't want to burden the entrepreneur. But we'll say she said there'll be a reward. We can offer funding differently.
Okay.
So we've put ourselves in that place, and therefore we're also vulnerable to the risks of not sustainable.
Okay, we've basically run out of time. I need literally a sentence from each of you, something we need to remember about the S in ESG, the S for social impact, and ultimately sustaining South Africa. Pawan.
Yeah, I think I'll leave you with a proverb that I quite like. We don't inherit the earth from our investors; we borrow it from our children. So it's very important that we leave a legacy behind in a much better space than we found it, the world.
Deborah?
Sure, I'll jump off what Gift said, is that we need to be part of the solution, therefore we'll be innovative in how we invest. We can't do it the same way, or we won't be part of the solution.
I love the S also for solution. Vugile?
There's an interconnectedness between all of us, and we all have our role to play. And so I don't think we need to step out, but we need to really lean in.
Gift?
I mean, sustainability cannot live in strategy documents and frameworks. We all need to have some level of individual accountability and drive it within our own ecosystems.
I think there's a South African proverb which says, "Umuntu ngumuntu ngabantu." Whatever you do has an impact on the next person, from an investment point of view to a community point of view. If we remember that, then I think we start to think about social and impact investing much more meaningfully. So gather the data, get the right partnerships, find the synergy, unlock the capital. We're all on a journey for growth. We're all on a journey of turning South Africa from a middle-income economy to a really dynamic new global market. That is the ultimate aim of investing with purpose and social impact. You've been watching a special broadcast of Critical Conversations brought to you by Sanlam Investments. Please note to continue the conversation on Twitter, on X, on LinkedIn using the hashtag Critical Conversations, hashtag The Future Sustainability, hashtag Action for Impact. There is a recording that will be made available to you, and when you follow the details online, you'll also find out more information about your CPD points. We'll be returning with new installments of Critical Conversations in 2024. We want to thank Sanlam Investments for creating a great platform for all of us. Thank you for your great engaging questions. You've made me sound smarter than I really am, and you've really probed our panel as to expanding the definitions much more. Thank you for your participation in the polls and in raising questions. Remember, the conversation doesn't end here. We must have critical conversations about South Africa and the world. It's about you, it's about me, it's about community, people, planet, and our shared prosperity. Until next year, from all of us here at Sanlam Investments and Critical Conversations, it's been swell. Goodbye.